Well, the rand getting weaker and weaker, and many calling it weaker still, saying, that we're headed for tough times ahead. Your view, because there is another camp saying be careful to extrapolate that weakness any further than where we're at right now.
Good morning, Alishia. Well, we're very much in the bearish camp. We think the rand can weaken further. I think the level that we are in next will probably be around that 741 area. And yes, I think the big concern is whether or not South Africa is going to be able to attract the kind of capital inflows that it enjoyed over the past year and a half. If those portfolio flows into our bonds and equities recede, then I'm afraid it's going to be very difficult for the rand to sustain gains for much longer, because we've seen South Africa still having a fairly wide current account deficit. It'll probably widen from current levels, and to finance that current account deficit with the lack of portfolio flows is going to put a lot of pressure, we believe, on the rand.
Interesting that you mentioned that, because I was listening to a conversation with John Cairns over at RMB on Closing Bell yesterday, and he was saying, yes, foreigners have been aggressive in selling over the past 3 months, but they've sold half of what they've accumulated, or nearly half of what they've accumulated over the 2010 period as a whole. So there's a natural limit to how much foreigners can sell in the bond market specifically, and they're probably approaching that already.
Well, obviously these foreigners are going to have to work out for themselves whether or not the risk-reward scenario is playing itself out in South Africa still. If we look at the kind of growth projections that South Africa is going to post this year, about 3.7%, that's not too far off what we're expecting from a number of developed countries, and in fact it's way below what another number of emerging market countries are expecting. So, from the risk-reward scenario, I don't know if South Africa is offering you, giving you enough bang for your buck, and as a result, I think there's room for them to sell further.
What has been one of the major threats to inflows into emerging markets has been the threat of rising inflation, and that, many saying could see emerging markets growth being deterred somewhat moving forward. Rising yields, rising stock markets in the developed world, in the meantime, not as attractive as as what we're seeing in emerging markets right now. So what's your position on that argument? Because we saw Chinese data come through yesterday, and that's surprising to the downside.
Yeah, I would agree 100% with that view in terms of where inflation's going, and yes, it could very well crimp emerging market growth, which kind of feeds into my previous argument about looking at those growth differentials a lot more closely. South Africa doesn't sit with a huge inflation problem at this stage, but we know all too well how closely linked CPI inflation is with the performance of the currency. And if the rand, as we expect, continues to weaken, then inflationary pressures will mount, and at some stage the Reserve Bank is going to have to start hiking rates at a time when South African growth is by no means, as I said, shooting the lights out. So I think there's a number of pressures building for the country, the medium as well as the longer term, and an inflationary theme is very much one to consider.
Of course, we had other Chinese data out yesterday on the trade front, and that encouraging implications of that on the rand.
Yeah, two positive developments for the rand. If we looked at China's imports from South Africa, they are actually rising exponentially, which is amazing. Even though the rand is strong, they're still importing a lot of our raw material. So that's encouraging from a terms of trade and trade account perspective. And then if we look at their general exports, the exports were growing quite rapidly. Now, we know that the kind of flows that have been going into China get basically absorbed by the central bank and then redispersed into emerging markets and into commodities. So it would be supportive of risky assets, would be supportive of commodities if indeed Chinese exporters continue to attract that level of revenue, which then, as I say, can be redeployed into those asset classes.
Michael